What up traders, what up investors, Ken here from Dyslexic Investor, and thank you for tuning in for another fantastic video. Today we're going to be looking at PSTH. Again, this is Pershing Square. This is basically familiar with Bill Ackman, the Silver Fox, as I call him. He has the absolutely impeccable hair, always on TV, and everyone just roaming around. Just a very classy haircut, what I wish I had that kind of hair. But anyways, going off on a tangent here, looking at this one, this is going to be potentially a lot of people are, I don't know if it's undervalued. Again, it's a SPAC, but it's slightly skewed in a different various direction. Looking at the overall SPAC information again, this was actually came out. We'll jump into the chart here in a second. It came out around like $21, $21.50. It slowly grind its way up to around 25. It's kind of hit that level couple times and kind of given back, but as of Friday it closed exactly at 25. So what is this SPAC? So with this particular SPAC, again, Bill Ackman, and they're really looking for a company, which we've said multiple times in the interview. I will link the Wall Street Bets description in the comments or the description box down below, and kind of the individual did a fantastic job on really breaking things down and really going into very great details, the timelines, the events of each of the timelines, and really giving some very well-rounded information rather than someone just posting a meme on just another PLTR thing. But with this particular play, basically Ackman and the fund is really looking for keywords in parentheses, a large cap, well-run, asset-light, family-owned, high-moat company with some of the expectations was Airbnb, but there also was Robinhood in the talks and other various factors around that. But that is definitely something that could really kind of come into play. Of course, Airbnb has kind of filed to go public already, but again, who knows what could be happening here. With this looking at this larger surrounding of things, what this SPAC kind of differentiates itself from other SPACs is the incentivizing the long-term hold. So if you hold through the merger / acquisition, you get a little bit of higher warrant counts, meaning that these could potentially be securities to cash out if the deal doesn't go through, and kind of gives you a little bit of security on the sense of going forth, and rather than just capitalizing on the market's day-to-day fluctuations. Full disclosure on that, I am not completely understanding the rhyme or reason of warrants. I understand the warrants are in place once the company transitions from one to another, but those warrant prices, I know one trader, which I'm trying to get a hold of, trying to get some information out, he literally trades and can trade warrants and really just short sells them depending on if the deal is going to make it through or not. Because if the deal does not make it through, those warrants just collapse and you can make a nice chunk of change, because again, it goes to zero. With that being said, please do your own due diligence on that. I'm more or less looking at this in the sense of being a little bit more longer term hold for myself. I own shares in this company. Not trading the options. I'm just holding the straight shares. It is popping up quite a bit on trending stuff within Wall Street Bets and some other forums. And then of course on YouTube, there's a lot of videos being capitalizing and looking at this particular stock, because the SPAC market has really has gotten a lot of attention just recently. I keep on looking my eyes over here. I apologize. I'm reading some of the comments going through here, looking through this continuously to go up. Again, it's a speculative play. We have no idea on where the Bill and the company are going to be looking to give them basically a blank check of like, hey, this is what we want to invest in. We're looking for this. It sounds fantastic. It sounds great. Like, I'm just ready to see things happen. Again, will we have something by the end of the year? I don't know. Like, again, there are some volume increases once we jump to the charts. So let's go ahead and jump into the charts here. So seeing here on the charts here, you're able to see the basic understanding here. Let me make this a little bit smaller. All right. So we're looking at the chart here on the daily side. Again, we're looking at the daily side. You can see that on the very top up here. it's been very aggressive moving between the 5 and 8 moving averages and really holding this level here, really breaking above that 2390, which kind of been a little bit of consolidation area and potentially to pop higher. In sight of really that key level of that 2450, it has broken past that. Again, the 5 and 8 moving averages, if you're familiar on the daily chart, the 5 and 8 EMAs are very fast momentum driven indicators on those moving averages. So if a stock's trading in that range, it has a lot of momentum, it has a lot of propulsion, and a lot of potential ripping up higher activity. Coming into just last week on close on Friday, we had that short day. Markets closed at 1 p.m. Eastern Standard Time. If we get a break above that high coming in next week and potentially, I don't know, next week or the following week, the potential target's going to be 2619 is going to be the next overall target they're going to be looking at to potentially be reached with PLTR. And I think with PLTR, and a lot of people are still getting a little bit of upset and a little what's the word I'm looking for? A little bit of the bear dance that the folks on PLTR got, or Palantir. They could be switching to this again. Kind of keeping a very keen eye on it. There is some options activity going out on this one, not as aggressive as other ones, but there is a lot more open interest than I thought initially. So even just going out to the reasons of January of next year, we're seeing a lot of open interest around the $25 strike price. Of course, nice round number. This is again a SPAC, so it's very speculative to be mindful of that. When we start opening up these couple months, there is a lot of continuous options activity going out here. You're seeing volumes of well over 1,100 all the way out in March. Someone's buying the $35 calls. Again, when you're buying calls or puts, you're not able to capture. You're really just playing on the price. You're not going to be able to really use this as a long-term investment in the sense of capturing what this makes this SPAC different than others. You're not going to be able to capture those potential increase in warrants on your behalf. Again, really coming out, we're having a lot of open interest going all the way out into the summertime, and even out into December, we're seeing some increase in volume going in there. So it's, again, I've owned this for a little bit of time, buying this actually on the dip around $22, $21. Actually, there's a little around the higher 21s, and really kind of seeing it slowly ramp up here and kind of bounce around. Particular, very traditional SPAC kind of play and not manipulation, but kind of roller coaster rides that we're looking at here. Again, key levels are going to be looking for initial support to the downside. It's going to be between 24 to 2390, and even to 2368 to around the 2345. Again, the stock doesn't move aggressively on a percentage basis, like a 2 or 3% move. So the options market just for this coming expiration for December is saying a move of $3. So I know a lot of people on Wall Street Bets, and it just has been trading the last couple months. A $3 move in 3 weeks is nothing compared to the swings we've seen with Tesla, PLTR, and the other ones. So this is going to be something that's going to be flying under the radar unless you're within the know of this particular SPAC being different than others, because there's a lot of these different SPACs are just smacking you in the face on trying to be the best one, and they're just begging you to buy them, of course, to help the company raise money, all these other various reasons. With this one, just going to be somewhat of a contrarian and just being a slightly different formed than all the other ones, and that kind of what intrigued me initially. And then, of course, Bill Ackman, love him, hate him, whatever. He has made some substantial gains in the market, especially with the call that he did on the pandemic. Yeah, there's been some other ones that he's kind of missed, but we've all made mistakes in the past. But that being said, thank you guys for coming and tuning in for another fantastic video. And I want to thank you before you go. Please don't forget to like if you liked it. If you didn't, you know how to hit the thumbs down. And if you have any feedback, put in the comment section and tell me your favorite Italian dish. Again, guys, thank you. This is Ken from the Dyslexic Investor. I'll catch you guys on the flip side. Peace.